Hello and welcome to the week ahead. This week is looking as if it's going to be a bit of a quiet one just in terms of scheduled events, but nonetheless from a Eurozone perspective, one of the key focuses will of course be on the latest developments in Greece. So just in terms of the news flow from over the weekend, we have seen Eurogroup head Dijsselbloem say that Greece has until February the 16th, so that's a week today, until they can that's the very latest of when they can apply for an extension to their current bailout programme. However, PM Tsipras, that's a Greek PM, does appear to have very different ideas and has actually increased tensions between the Eurogroup and Greece. So he has said that Greece will reject an extension to its current bailout programme and has also added that Syriza party will continue to roll back the austerity reforms. So if the Eurogroup and Greece do appear to remain very far apart in terms of making any form of negotiation with regards to talks. And just in terms of how this has filtered through to the market so far, so European equities have opened firmly in the red across the board, with the German Bund supported by the risk-averse sentiment. And more specifically for Greek assets, the ASE, that's the Athens Stock Exchange, currently traded with losses of over 5%, with the Greek-German spread currently wider by over 60 basis points. So just in terms of key dates to look out for, on Wednesday we do see the Eurogroup holds an emergency meeting with regards to Greece, so we'll be looking out for any further follow-up commentary to that meeting. In terms of main scheduled events, the main standout event this week is that of the Bank of England's quarterly inflation report. So it's very much widely expected that the central bank will downgrade their inflation forecast. There's a possibility that they could forecast inflation to dip below 0% for the first time in over 2 decades since the central bank began forecasts. However, one interesting thing to bear in mind is that Carney does currently see the recent blip in CPI to be more of a transitory thing, so therefore it said focus may actually reside with more the Bank of England's forecast for slack in the economy, as participants continue to gauge whether the Bank of England will raise rates this year, or indeed when within 2015 they will raise rates. So that'll be very much the key focus from a central bank perspective, as well as any further comments regarding the Greek and Eurogroup situation. But other than that, it does remain particularly light, so that's all from me, and I hope everyone has a fantastic week.